Before I start this segment, I must tell you something about the subsidiary books. Be careful. In my questions, I'm going to teach you only simple cash book. Actually, there are three types of cash books: one column, two column, three column. One column is called sometimes cash column cash book, two column is called discount column cash book, and three column is called bank column cash book. But in this question, I'm going to take the simplest cash book, that is one column cash book. Basically, one column cash book and cash count, there is no difference. And secondly, the purchases book, purchases returns book, sales returns books, etc., they are also called journal. Some people like to call them purchases journal, purchases returns journal, sales returns journal, etc., etc. And we are teaching you manual accounting. We know nowadays the accounting is done on computer, but you have to learn the basics of accountancy. If you are not able to learn the basic of accountancy, you won't be able to use the computer software of accountancy anywhere. So we are going to assume that you are doing manual accounting of the firm. If you want to do the manual accounting of the firm, go to the bookshop and buy the accounting books. Number one, cash book. Number two, purchases book, purchases returns book, sales returns book, BR book, BP book, and general proper. These all books are available in the bookshop. So we are going to assume that we are going to note down all the things in these subsidiary books. Let's take another question. A starts business with cash rupees 5,000, purchased goods rupees 1,000, sold goods costing rupees 800 for rupees 2,000, and the closing stock as on 31st March 2013 was rupees 200. First of all, we have to recognize all the transactions, whether it is cash transaction or non-cash transaction. If it's non-cash transaction, it will be taken to the purchases book, purchase returns book, sales returns book, BR book, BP book, or general proper. If it's a cash transaction, it will be taken to the cash book. So A starts business with cash. Cash has come in the firm. It's a cash transaction. And if it's a cash transaction, you have to identify whether it is a receipt for the firm or payment for the firm. So A starts business with cash rupees 5,000. It means it's a receipt for the firm. So come to the receipt side of cash book. To capital rupees 5,000. Then purchases rupees 1,000. These are the cash purchases, cash transaction. It's a payment. Come on the payment side. Buy purchases rupees 1,000. Then sales rupees 2,000. It's a cash transaction. If it's a cash transaction, it's a receipt. So come on the receipt side. To sales rupees 2,000. So in this question, you will see that we didn't need any other subsidiary books. We needed only one book, and that was cash book. So let's calculate the closing balance. On debit side, the total is 7,000, and on credit side, it's only 1,000. So by balance CD will be rupees 6,000. Total on both sides, rupees 7,000. Be careful. In cash book, the debit side is always stronger and credit side is always weaker. So closing balance will always be on credit side, means there will be by balance CD, or we can say balance CD is always on the credit side and balance BD is always on the debit side, and cash book carries debit balance. Now what we have to do? We have to do the ledger posting on the basis of subsidiary books. We have got only one subsidiary book, and that is cash book. So capital account, sales count and purchases account. These three accounts are involved in the cash book. So open these three accounts, capital account, sales count and purchases account. Now we'll do the ledger posting on the basis of cash book. Previously, we used to do the ledger posting on the basis of journal entry. But now, at this moment, we are going to do ledger posting on the basis of cash book. Whenever you do the ledger posting on the basis of cash book, you will have to apply the principle of seizures. Means debit item will go to the credit and credit item will go to the debit. So first of all, to capital rupees 5,000. So you take 5,000 from the debit side and come on the capital account credit side. Buy cash rupees 5,000 because you have taken this item from the cash book. So you can write down buy cash book or buy cash count, but I'll prefer buy cash count rupees 5,000. Then next item, to sales rupees 2,000. Come to the sales count and on credit side write down rupees 2,000. And what will you write down in the narration? Buy cash account. Then credit side, buy purchases rupees 1,000. So open purchases account, come on the debit side, to cash count rupees 1,000. In this way, we have completed the ledger posting on the basis of cash book. So let's calculate the closing balances of each and every account. So cash book is also cash account. CD is already there. I mean to say closing balance is already there. Now capital account. To balance CD rupees 5,000. Now in sales count, to balance CD rupees 2,000, total 2,000 on both sides. Come to the purchase account, buy balance CD rupees 1,000, total on both sides rupees 1,000. In this way, we have completed the ledger posting. So let's make trial balance on the basis of ledger posting. You know, trial balance is the list of closing balances of different accounts. So first of all, take up cash book. Cash book also works as cash account. So on debit side, I mean to say on the side of debit balances, cash rupees 6,000. Then come to the capital. To balance CD 5,000. It is on debit side. So come on the credit side of trial balance. Capital rupees 5,000. Then sales CD on debit side rupees 2,000. It will be taken to the credit side of trial balance rupees 2,000. Be careful. There is no debit side or credit side of trial balance. There is always list of debit balances and credit balances. Just for the convenience, I am calling it debit and credit side of trial balance. Then purchases, CD on credit side. So it will be taken to the debit side of trial balance. Purchase rupees 1,000. So total on both sides rupees 7,000 and closing stock rupees 200. It will be written down at the footnotes of trial balance. So closing stock as on 31st March 2013 rupees 200. And on the basis of trial balance, you can make final accounts. And in the previous segments, I have already taught you how to make final accounts on the basis of trial balance.